General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, knock out the charts. Tuesday's low held. Didn't get the target. NFP was terrible. Then we just chopped inside of this NFP range. The low was Tuesday. It's like a perfect doji week. So it's a bearish week. So let's look at it from the other side. The high was Thursday. True anchor. The week closed bearish. Terminus would have had to been Monday, Tuesday high. That was it. We didn't get no real key level. But we got these equal highs here. Thursday. Really just Friday. Premium fair value gap from Thursday. Let's get it right. Yeah. Let's get the deliveries. trending high today, and then we just basically just chopped. Hold up. What's up with the picture? All right. Mm, and the price just sold off. NFP was terrible, but we didn't leave the range. ICT said data is not reliable, but it could be war drama just holding us in this range. Okay. And then look at the determination of the hole. Like it pushed like it wanted to go higher. Then it just came down in the day. Look at how price just manipulated everything pointed to the sale. So price took that high and chopped until end of day and returned back to the low of the day. Classic example of the market acting irrational. You could see it coming up. You knew it was going to do that. All right, day closed, still in the range, but we just closed down. I don't know if this picture coming in or not. It's crazy. Maybe it's because it's recorded or Notion, the Notion update. Maybe it's the Windows. Ain't no telling. Okay. Finished. Close day. Going into the weekend. Body wanted to hold in positions. And I'm thinking most of this trading is small traders because we're not taking, not leaving the range, not leaving the macro range. 15 minutes. So we took out those relative equal lows on the daily. And it don't look like we took out Tuesday. No, we didn't. So those 2 day lows I had pointed out yesterday ended up being a draw. NFP did its thing. Continue lower. The relative equal lows on daily time frame cleared out. Let's get it on the H1. Crazy bearish week with Monday being the high of the week. That's a war week, what you expect. Because expectations always be high. This computer or the recording software is out of control. Okay. Oh, the week opening gap, we never really left. Okay. Just making the low so interesting. That high is still interesting too. The first picture probably won't load now. Oh, there you go. There we go. No lag, no fan. Where it go? Okay. Main takeaway here. We waited till the last minute to mail. Mm, I was expecting something different. Mm, we recognize the names of market plan. Tomorrow's a study day. All right, just that on that. Y'all have a good day. Peace.